Hey guys, good morning. It's the Crypto Cowboy, and it's Saturday morning here, 10 o'clock Chicago time on the 21st of March, coming to you with another edition of Bitcoin Technical Analysis. We'll take a look at Bitcoin. We'll move on a little bit into the stock market, S&P 500. We'll take a look at gold and oil this morning, just to kind of have an overall view of the macro picture. We did have, so things are looking, pretty bleak around the world with this threat of the virus. I think the measures that are being taken are solid, and hopefully it will minimize the impact that it's going to have on the overall global economy. Might be a little bit too late, but I think there'll be definitely changes into the systems, and you can see the central banks are definitely coming in with major interventions, and they're trying to do anything in their power to stop this from becoming a major financial crisis. Now, will they be successful? We'll see. But in terms of Elliott wave and social moods and longer term analysis of trend moods, we might have hit a turn into this, and it might take a long time for this to recover. There'll be job losses and a lot of unemployment. A lot of businesses will probably shut down, and these things are not just gonna get better overnight. But I hope they do. But until then, let's stick to the counts and see where we are. I think a lot of the funds, obviously, that were into the GBTC, and maybe some of the bigger hedge funds and macro funds that were holding Bitcoin through different instruments have liquidated and tried to raise cash. You'll see the same. It's in the oil and gold. So there's major shifts into the money flows in across the globe. You'll see the dollar index breaking higher. So there's a flight to safety. But we'll try to stay safe out there and just stick with the chart analysis, and if you don't have a whole lot of experience into managing situations like this, you have to trade small, and there's a lot of opportunities out there in the futures market where you can get in and really take advantage of some of this good moves, especially if you have Elliott wave behind you. But other than that, just trade small and just be safe. Okay, let's take a look at the red count here in Bitcoin, and you can see we were talking about it last week as well. I'm gonna continue to look higher here into Bitcoin until I have a reason not to. Okay, and this, you can see that the move has been sideways. We are in a big consolidation period here since December 2017, and maybe the better interpretation here is that of a triangle. We're gonna go take a look at the yellow count, but if we do want to stay bullish, and I like this interpretation at this point until we start breaking below this 3169 level, which was the low in December 2018, we're going to still consider this as being a second wave. When the market is going to tell us something else, then we'll switch, and we just have to adapt, right? Okay, so if this is a wave one up, 1, 2, 3, 4, and 5, we're looking at this move here as a ABC. We are very close here. We've passed, I think, the 786 fib retracement of the second wave with the wave 1, and I can move this wave up here and just have this as a flat, so it doesn't really matter. This could be a W, this could be an X, and a Y. I've talked about it. The nature of the correction is not as important as the idea that we must hold these levels for this to become valid. So we will be looking for the wave 1 up here that should unfold in a 5-wave structure. We want to take the top of this B wave at about 10,400 before we can say, okay, we're complete here and we're about to embark in a larger uptrend up. We will be looking for a correction here as second wave, and this is going to be in 3 waves. This should confirm the advance. It will start to look like an inverted head and shoulder, and then on the breakout higher of this, then we should embark much higher here towards 30,000. So there's still a lot of wood to chop here on the top side. Now, if you look, we did have a pretty nice reaction here from 4,000 to at about 7,000, so about a $3,000 swing from the lows. But now we're still fighting this resistance at about 6,800. You can see the level. I'm going to go down to a 2-day chart. You can see the level of if I can find my my marker here, give me a second. You can see this levels down here that are holding at this point. So this was support on the way down, and now it's kind of offering resistance. And you know, the internals have to look something like a 1, 2, and then you're going up in a third wave, a fourth, and a 5. It needs to happen pretty aggressively so we can have a pretty clear rejection of these levels. The more we kind of hang around these levels, the more I'm going to lose confidence into this count, and we might be moving into something corrective and then break lower. But until then, you know, I'm going to stick with this interpretation and see where obviously what it takes us. But again, we are looking for a wave 1 up, a second wave correction in here, create some kind of an inverted head and shoulders. This would be the head, and then we'll be looking for a break up higher. If you guys want to take advantage of some of these internal moves that we're trading and some of the internal counts, you can come into the you know, into the premium room, and I have a lot of more information up there and daily discussions about the counts and, you know, intermediary trends and all of that stuff. In here, I'm just going to present some of the larger themes. Okay, so back to a weekly chart. This is how it looks, and you know, pending a break of these levels, we're going to stay with this. Now, going back to the alternate count, which is the yellow count, I've talked about this. Let me go to a weekly. We are looking at this as being a triangle in a fourth wave. If you want to see a little bit more details about this, I've talked about it in the last week's video. But go back to a today chart. Since the move is sideways here since December 2017, we're looking at this as being a triangle. Started off of wave A in a WXY. You have a B, pretty sharp leg up here in a wave B, and then you do an ABC down for leg C. I was cautioning against this as well, that, you know, we're going to probably get a bounce here at this trend line, and then now we're doing this D wave up in a WXY manner, ABC, you know, back here towards maybe 8,500. I'm not sure if we're going to have enough juice to kind of close there's a gap there on the futures market, and, you know, we're going to close that. It's probably going to happen into this D wave. Then we'll do another E wave lower, and then, you know, that will resume the trend, and we're going to start to break up. And this could extend, again, maybe, you know, if I have it here kind of towards the beginning of next year, but we could be the whole year spending into this, you know, chop and triangle style formation in Bitcoin from the D lag and then the E wave, and then we could break up higher. The wave count on this situation becomes invalid at about 3115, which is or 3100. I'm not sure exactly what the low was in here, but this is where this wave count will become invalid. All right, let me take a look also at the other count, which is the bearish one, and this, we're calling this the silver count, and we're going up here to a 1 week. When you know, if this turns to be some kind of a bearish move down, you have a W, you have an X, and then you have a Y wave, and we're just in the initial phase of this corrective leg. We've done the A wave move down, we've done a big fake out in a wave B, and now we're starting to break lower in this C leg, and this will look like a wave 1 up is completed. We have a WXY here for a wave second, pull back into this 7300 zone, then we come back in a 3, a 4, and a 5 towards 2200 to complete, touch this trend line, and then either secure this second wave down here, or, you know, let it develop a little bit more into a more complex correction. But this would be basically the idea behind it. If I go to a 2-day chart, it will look something like this. You have an A, B, now you have a 1. We've done the first leg of the correction in a W or near completion here, drop down in an X, maybe do a Y. I don't think this pattern is all the way to. I think it would be very sharp for it to be. If it is, then definitely will break lower, about below 4,000, and we got to do it fairly quickly. If we're going to spend a little bit more time, you know, consolidating here after this huge drop, then we got to do some kind of a, you know, zigzag up or a double zigzag into a second wave. Try to stay below the 7,300 overall, and then break lower in a third, a fourth, and a fifth. This leg here will be pretty major and pretty devastating again, but we'll see once we complete this formation. If we're starting to break up above this 8,500, then we're gonna be very careful on this, because we might have a completion into the red count, and we can start moving up higher. So for me, this 8500 level is extremely important. If the price kind of starts to attack this aggressively, and then we start getting towards the top of this B wave, then we will be looking to have a confirmed low down here, a pullback, and then a break up higher. Okay, so this is all I have in the Bitcoin. So basically, once again, is the red count, I have the yellow triangle, and then I have this bearish interpretation as well. And again, some of these internal moves can be played, pretty nicely if you are prepared and you know which legs of the move you want to trade, and where to get in and where to get out. Right now, I'm kind of neutral on everything. I'm just kind of stepped to the side. We've had a bearish outlook up here, and I'm just eliminating it for right now until I'm getting more clarity into in here. You really don't want to get chopped up into any of these moves. So we'll see if we're getting an X. Maybe another opportunity here will be, to sell Bitcoin as it moves up higher again and getting some price confirmation. Until then, I think it's solid to stay to the downside. To the side sideways. I wanted to say. All right. Okay. So let me take a look at the mix as well here, and I'm not sure how many of you guys follow this, but let's take a look at the S&P 500. I've heard there is a little bit of interest into some of the comments and emails I've got. So let's just kind of look at this and where we are. And there's a couple of counts here into the S&P 500. Definitely, this drop here was very, pretty massive. I mean, if I'm going to measure here from the top of the wave B down here, we've dropped close to 35%, and pretty massive drop. If you look into this log scale, let's just measures the one from 2018. So this was a 57% drop. So there's still from 2008, so there's still a while to go until we're going to match the drop that we've had in the market in 2008. So on this one, if we're looking at this as being a flat corrective, we got to start holding these levels. If it's a flat correction, you can count this being as a 1. Then you have a wave 2 down here, and then you have a 3, you have a 4. So if this wave 2 was also a flat, we would get another flat up here. By the guidelines of alternation, you wouldn't really want to have another flat, but it's not invalid. And this is the only way where I could still count this as being bullish. There was an interpretation out there where you could be looking at this as being a triangle. Let me just go. It was in here, but this guy got invalidated. So we were looking at this as being a possible A, B, C, D, and E, but we've broken below this A lag, so it cannot be a triangle anymore into this count. So this becomes the next kind of levels, the next kind of viable count if we're holding to any bullish outlook in here. I tend to believe it's not, just because of everything that's happening around the globe, and with obviously this panic. Now if this is going to end up being, let's say, the big bear market, the big virus market drop, and we're completely flushing this out and ignoring this move, and we're getting a sharp move back up, and this is going to be considered and be remembered, let's say, in the history as the big virus panic of 2020, and we're making new highs up here into the market. I'll be surprised if that happens. You never know, but this would be one count that this could be valid. So in an ABC, we've reached more than 1.618 multiple of wave A as part of this correction, and if we're dropping any lower, we're going to be looking to these levels, which is about 2,000, little under 2,000 here. And the count that kind of shows that, it's this, and we've reached, let's say, a major super cycle degree up here at 3,400. And now we're dropping, and we're actually embarking into a bigger bear market here, where we're going to go in a wave A, and then we could go sideways as a wave B for a while, and then drop back down towards 670. You're looking usually into this kind of corrections, you're looking to target the wave 4 of a lesser degree, and that comes here at the bottom of the bear market from 2008. And this is how this would unfold. You would have this wave A down, which is just in the beginning. You have a wave 1. Then you have a 2, 3, 4, and 5, come back to 1800, pull back, maybe do some sharp rallies in a B, and then drop back down into a major C lag again. And this could, be for the next, 4 or 5 years, 6, 7 years of bear market. As scary as that sounds, it's very possible we might never see this highs taken, for a long time. Okay, not to sound too alarmist, but it's just a simple Elliott wave structure that if you take a look even at the 3-month chart, it doesn't look that impossible, right? I mean, just look at this thing and just say, look at the drop, and I'm just going to delete that. I'm going to reverse it, but you can see that this is a pretty clear indication that we've reached a major top on here. Okay, I don't see anything like this type of a candle anywhere near into these drops, short of something like this in the 1987. You guys remember the market crash, the famous market crash of 1987 in October, I think it was, that Black Monday. And since then, nothing close to that. So I doubt that this is just going to finish up and we're going to move higher. I think this is where we're going. Okay, take a look at, let me just revert on that so I don't lose the counts. Okay, and then let's take a look at oil. And then on oil, we have a couple of counts here. I was talking about this one for a while as we were making the second wave up, that if this breaks lower, we can start targeting. I wasn't expecting the move to be so fast, but we've reached $20 into the price of oil. You have A down, B, C for a W, you have an X, and we could be doing this Y lag, which means that the oil can be, just like a stock market, again, into a very prolonged period of weakness, of sluggish global growth, where you do a 1, 2, 3. We're going to get some kind of a pullback in a wave 4, then maybe a 5 to complete A, then do a B, and then do a C. So, near term, you can take advantage of maybe some moves up here into the price of oil, look for a rise back into the $30 level, and then, take advantage of another move lower here to complete A. But I don't think this move is complete. There is a count that I have here that can show that this is basically an ABC, and you're done for this wave Y. And you can take this whole move and just put it up here, but I don't think that's the case. Okay, and then, you can see it up here. If I look at this WXYX, and then ABC, and then this move, you can kind of call it done. And now we're looking to the next leg up higher, or, whatever this is going to end up being if this move, is complete. But I don't think that's the case. All right, and then I wanted to take a look a little bit at gold as well. And I have it on here. Longer term here, you can look. So this is a 1-month chart. Big rise in the price of gold, right, from 2000, 1, 2, 3, 4, and 5. You have this first wave down as a wave A, 1, 2, 3, 4, and 5, ending diagonal. You have a W, you have an X, A, B, C, D, E, and then you have a Y in an A, B, C, and the move is done. You reach 786 of this B lag compared with this A lag, and now you're dropping back down here, and we should come below 1,000 level into the price of gold. And I know this is extremely counterintuitive to all the money that's being printed, but if we're getting into a big period of deflation here, it's not going to matter. They're going to keep fighting this. They're going to be throwing trillions of dollars at the market, and it won't matter. The gold will still sell off. We'll eventually find some kind of a low down here, and then we're going to embark into the next big bull market in gold. So that might be still another 4 or 5 years down the road. I am looking for a break of this 1445 level. If we're breaking below this, then I'm definitely having a pretty solid confirmation that this is what's coming, especially if we come even down below this 1400. There is a possibility that we could turn up from here, and this is still some kind of a corrective move. And, but for right now, that's not my primary interpretation. I think we're going to come lower. Let me see if I have that count, the bullish count, on anywhere. That we are in a 1, 2. So looking at this bullishly, it would be a 4th wave corrective. Very small wave compared with this whole kind of move up here. 3, 4, this 4th wave is pretty small. And then you would look up higher as a 1, 2, ABC and flat, 1, 2, 3, 4, 5, 4, 3, some kind of a 4th wave that comes back here. We have to stay above this wave 1 at about 1375, and only then you can break up higher. But if we're breaking below this level, then I think it's all done and we're moving lower. And a lot of people will be very surprised and why is gold moving lower, but we'll know why. Okay, so yeah, thank you guys for watching. A little bit of a longer video up here, almost 20 minutes. I hope I didn't take too much of your time. If you have any questions, leave them below. Hit the thumbs up button if you like the content and what I present up here. Come and join us into the premium room.